This video will give an overview of the distribution detail tab. As you can see from these others, they're blue. You're able to go to any of those at any time by selecting these buttons. The distribution detail again is gray, indicating that you're on this tab. The distribution detail is one of the more detailed tabs that are available for you to take a look at. In all honesty, it may be something that you never look at because there's so much detail. I would definitely suggest that it's not something that you would show your clients. There's so much detail and calculation here that it may scare somebody off. But what this tab is doing, what this page is doing, is showing the calculations year by year. You can see here on the side the different types of income sources, and the here is showing which ones have been selected. If it says show, those are ones that have been selected. Hide, those will be not showing in any of the prior tabs or information that's shown. Up above here you'll see the year and the age, so you can choose a certain age if you wanted to look at some information there. The historical returns, if you have selected here on the financial summary, going back to the financial summary, if you have selected in the market returns that we're going to use manual inputs, it's going to calculate based on what those manual inputs were on the profile tab. These here are the actual historical returns that we would be using if the historical return button is selected on the financial summary tab. Again, this is the page where all of the detail is, in addition to the tax detail, which will be on another video to briefly explain. But what you'll see here is year by year the workings to be able to go through, figure out the amount of tax that is due in that year, calculated based on the information that you have input. Up above here you'll notice the yellow. As clients get into retirement years, if depending on the strategy that's selected, it's going to take dollars from different types of vehicles. You'll notice here that there's a tax deferred distribution RMDs and tax deferred distributions additional. The reason for that is in these years here we're taking amounts because we have selected the strategy of taking tax deferred dollars at the beginning of retirement prior to when required minimum distributions are required. After that point, and you'll notice here at age 72, because of the new Secure Act that has just gone into effect with the start of 2020, required minimum distributions no longer start at 70 and a half, but at age 72. So what the calculator is doing in this instance is it's actually saying this is the amount of money that we have to take out for required minimum distributions. We have no choice other than to pay the 50% penalty, which we don't want to do. So this is calculating the amount of money that we have to take out from tax deferred dollars. If we're taking out dollars from our LIRP, that will show here. If we have the tax-free distributions here, if we have some Roth funds, those will show up there. But what it's doing is saying we know that we have pension, we have rental income, and we have Social Security. Those are constants with our retirement plan. Now we have to take this. So these dollars here are dollars that we have to draw each year based on the calculations with inflation and any other types of adjustments. But it's telling you what dollars we have to take. Then if we need more, that's when it will take additional tax deferred dollars or LIRP distributions determined by the strategy that we're using. Goes through and figures out the income tax and the income after taxes that goes back to our formula to be able to make those graphs up front. If we get to a point where our retirement gap is happening and we're running out of money. As you can see here, we've now drawn our RMDs. We're taking the rest of our tax deferred, and based on this right here, retirement gap says that that's how much we're short in each of these years. And then this here, the total ending balance, is the amount of retirement funds that are still available, and at this point we've run those out. Now going down to a little bit more of the detail for the tax deferred, you can see here this is actually showing all of the tax deferred vehicles, accounts, and how they're growing year by year with the interest rate that's selected. This is the manual inputs. If we select the historical, this amount will change based on what these are here. The fees will show an average based on what we've selected, but it's going to go through each year, calculate the growth, the fees to come up with the subtotal, and then what our contributions are, employee and employer contributions. Again, this is tax deferred, so this would be your 401k, IRA type selections with the ending balance, and then each year going forward to see that balance. Now, if you wanted to see, this is combined client and spouse information. If you wanted to see detail for each of their contributions, you can click this. You see this plus sign over here. Click that, and that will actually pull out the information for each of the calculations going forward, and it will summarize it by the client and the spouse if they have contributions. And then coming down, here's the combined tax deferred balance. Again, what if you wanted to see each of the individual accounts? Again, clicking on this plus sign here will allow you to be able to pull up each of the individual investments and see how each one of them is growing, how we're drawing the funds out. As you can see here with the distributions, we start pulling money from this one. So you can see here that you can see as much detail as you want by just clicking the plus signs over here on the left side. It will tell you the type of investment that it is. Again, Roth 401k was selected, and because it is tax-free, it's not showing up here. IRA will show up here, and then going down to the spouse, she had a Roth IRA, nothing there. So that takes us down then as we go through all of these investments, all of the combined, again, tax deferred balances, and then we get to the tax-free, same thing, where we have the summary combined of the two people. If we want to see the details, we can click these here to be able to provide more information on each of the selected accounts that we have. The information down here is nothing that will really be used for your purposes other than some of the calculations that will be on the prior tab, the financial summary. So as you can see, there is a lot of detail here. And I like to look at it to see that, to make sure that calculations are going in correctly as far as contributions for different types of things. But again, you can see here it says catch up. That means that he's at an age greater than 50 or above, to where he's getting that additional catch up amount available on the tax deferred type contributions.